Hi friends, welcome to A to Z Learning channel. Most retail investors think operators are bad people. They consider them as the villains of the stock market. They are the one who are usually assumed to be causing significant losses to the retail and small investors. But is it true? In this video, we'll help you get those answers, will help you get the answers of two most important questions in the life of a small and retail investor. The first one is how stock prices are manipulated by operators. And the second question, how to safeguard your money against such rigging, such manipulations by operators. So it's going to be a very important video. So please stay with us until the end of the video so that you don't miss anything important that we're going to be discussing. So without any further delay, let's commence our video. So now let's understand how stock prices are manipulated by operators. There are two ways they can do this. Let's understand the first method, which is called pump and dump. It's a very classic way of manipulating stock prices. These are usually done by operators in collusion with the company promoters or management. Let's understand how it is done. Operators first of all start a promotional campaign to spread positive but false news about the company's stock, and they usually do this in the stocks where they have recently bought in large numbers. So they already hold stocks of such company in large numbers. Company promoters then join them in supporting further by making some positive announcement. They could be making positive announcement in terms of fresh large orders, new product launches, or adoption of a new technology that has made them highly efficient. In some cases, they go to other extreme where they simply fudge the books of accounts to support the narrative that company has had a fantastic financial turnaround. When small and retail investor listen to all this positivity, company managements in the business newspapers, in the business channels, talking about all the positive things at the company, they get lured. Small investors get lured by that positivity, and they think there is an opportunity to make money, and they start buying the stock. This usually generates high demand. High demand pumps up the stock price. So that's called pumping up the stock pricing. Once a target price is reached, operators and promoters start dumping. They start selling the shares, resulting into a sharp fall in stock price. And in the process, before retail investor or a small investor can figure out good exit from such stocks, they are already trapped and their investment is trapped for a long time. So that's a very old method, very classic way of manipulating stock prices and trapping small investors, retail investors. Now let's understand the second method. The second method is called short and distort. This is typically done by operators with the involvement of bear cartels. Bear cartels are the people or the market players who always place heavy bets on stock prices falling. This particular method usually doesn't involve anyone from the company or anyone from the company promoters. Let's understand how it is done. First of all, operator short sell the stock, which means placing a bet that the stock prices would go down. Operators then start spreading negative information regarding the stock and the company. They also offer poor predictions. They paint a very gloomy, doom picture, negative picture around the industry and particularly the company. And they place very poor forecast on the target of the stock price. This leads to a panic situation When a retail investor, a small investor, picks up this sort of news, they get panicked and they want to consolidate their losses immediately. They don't want to be stuck with the holdings of such company where it is very clear that the stock price is going to fall. So they start to sell. There is a huge supply of sell orders in the market, leading to stock prices to start falling. You see huge significant fall in the stock price, and once it reaches a particular target that operators have in mind, they buy the stock. They had sold the stock when stock price was up. With this negative news and panic in the market, stock prices fall. They buy and square off their positions and make huge profit. This is called profiting from short selling. This is another way operators manipulate the stock and end up causing losses to retail and small investors. I hope this has been a simple explanation for you to follow and understand. If you have any question, please do let us know those questions through the comments on this video. And if you've not subscribed our channel A to Z Learning as yet, please subscribe so that you get the notification about our videos immediately. Now let's talk about the second part of our video. The second part is basically how to guard your money, how to guard your investment against rigging, against such manipulations by operators. So we've now understood how the stock prices are manipulated, how the stock prices are rigged, sometime in collusion with promoters, company management, sometime in collusion with the bear cartels and other market players to really cause significant losses to retail investor, small investor. But if you are a small investor, retail investor, how do you guard yourself against such riggings? First of all, I think it is very easy to blame operators when a bet turns sour. When we place a particular bet on a particular stock, or say that you are placing a bet on a particular stock that it will go up, so you buy, but later on you find that the prices have gone down and you have made losses, you start to blame operators. Whether operator has had any real role in that or not, retail investor has first place to go to is blame operator. So it's very easy to blame operator. But most of the time, I feel retail investors have to blame themselves for their mess because they didn't carry out certain checks. They end up buying stocks based on hearsay, rumors, false news. If a friend is talking about that, but that friend may be talking about buying a particular stock from a very different position, from a very short-term position perspective or a long-term position perspective, you hear that and you place your orders, whereas your own investment goal may be very different from your friend. So we end up, small investors end up buying stock based on hearsay, rumors, whereas prudent investor has to do basic research, basic fact finding before they commit their money to such investments. So now let's understand what are the simple disciplines, simple rules that a retail investor, a small investor can follow to make sure that them falling prey to operators, falling prey to manipulators are as low as possible. It is very difficult to eliminate such risk, but your strategy should be, your approach should be to mitigate, to keep it as low as possible. The risk of losing money is absolutely, you can't eliminate that in the stock market. So you have to be prepared that sometime your bets, your convictions will result into losses. But at least you can avoid falling prey to manipulators. So there are simple rules that I'm going to be sharing with you. So let's start that. What is the first rule? First of all, one must stick to well-known stocks that have got high trading volumes and are usually analyzed by number of market experts. So effectively, you could say that, say, Nifty 50 stock, Nifty 100 stock, large cap stocks are the good one for a small investors who have got limited knowledge about the market players. They should make sure that they are investing, they are trading in those sort of stocks, because these large stocks, which are analyzed, followed by wide variety of market experts, and they have got usually high trading volume, these are very hard and very difficult to manipulate by one player or one set of operators. Second, don't believe the hot tips that you get. We get lots of WhatsApp messages, we get lots of phone calls, we get lots of SMSs from time to time talking about buy this stock, it will double in 2 months, buy this stock, it will double tomorrow, buy this stock, it will increase tomorrow, and so on. Don't believe in those hot tips. Do your basic fact finding. Look at the earning growth of the company. Look at the management quality. Look at whether they are tainted leaders or there is general positivity around company and company's management. What is the balance sheet strength? Do the basic. Do they have huge debts? Do they have issue in terms of cash flows, free cash? Do that basic fact finding before you kind of look at purchasing shares, look at investing in any particular stock. Don't blindly buy the stock that are suddenly on their way up or down, because usually a sudden up or down could be news based, could be a game by operators. So stay away from those stocks. Don't take the recommendations from your brokers. Sometimes brokers may be acting on behalf of people who have got vested interest because they have paid high commission to get some trades in a particular stock. Brokers could be selling that. Brokers could be recommending stocks based on that. So stay away from that. Have strict discipline of stop losses. Even if you kind of make place bets, have conviction on stocks and all that, have strict discipline of stop losses. That if stock goes in the direction, in the opposite direction up to a limit, you will stay invested. But beyond that, you will cut your losses by exercising, by acting very firmly on these stop losses limits that you have to set. And last but not least, do your own research. Verify all the claims made by the company about its profitability, fresh orders, new product launches, new technology. Make sure that you have an independent way to verify some of those claims. Don't just blindly trust what company is saying. If you follow these 6 simple rules before making your investment, chances are that you will not fall prey to manipulators or operators and incur heavy losses. I hope you found this video helpful and simple to understand. Please do let us know if you have any comments or suggestion on this video. We would look forward to your comments, whether they are good comments because you've liked the content of our video, or the comments where you would like us to approach this sort of content differently. And if you've not subscribed to our channel A to Z Learning as yet, we would urge you to be part of our viewers community by subscribing our channel so that you can also help us pick the topic, set the agenda in terms of the topics on which we make the video in the future. Thank you very much for watching our video. All the best.